Good day everyone. Welcome to this lesson on candlestick patterns. Now if you ever try to look at a share price, even just a normal trend line, you can be able to see that the line sometimes moves in an upward direction, then it goes down, then it goes up again, sometimes it goes sort of in a straight line forward, and it constantly changes direction. Now that change in direction usually denotes a trend. Now, a trend can be defined as the movement or direction of movement of a share price chart over a period of time. And a trend can either be classified as an uptrend, or it can be a downtrend, or it can be a sideways trend, or what is called a ranging trend. Sideways and ranging trend is the same thing. Now, what does it mean? An uptrend means the share price is trending upwards. In other words, the momentum in the market is taking the share price higher and higher. On the opposite end, you have got a downtrend. And a downtrend means that the share price is trending in a downwards direction. So it's going lower and lower and lower. Now, a candlestick pattern, it can be formed either at the top of a trend, or it can be at the bottom of a trend. Now usually when a pattern happens, something is about to change. Take for example a vehicle that is moving in a northerly direction. When that vehicle comes to a stop, then you know that it's either going to turn, remain stationary, or it paused and is going to continue in the same direction. We use the same kind of thinking to look at share price charts as well. It can be in an uptrend, then it comes to a halt. After coming to a halt, then it can go down. Or it can come to a halt, then it sort of pauses, then it goes up again. Or it comes to a halt, then it remains in the same place, moving just up and down within a similar range. Now, candlestick patterns are important because usually they denote lower risk entry into a trade. So in other words, if you want to buy a share or sell a share, you should always look at where the trend is going. If a share is in a downtrend and you buy it because it looks cheap, it can take you further down because it was in a downtrend. If you sell a share, what we call short selling, which we shall learn later, and the share continues going up, then you are going to lose because you are betting that the share price is going to go down, yet it continues in an upward trajectory. So usually there is confirmation, because if a pattern happens after an uptrend, then you need to look and say, is it going to move further up, or is it going to go down, or is the price going to hang around that area that it has reached in the top? So by confirmation, we mean that a share has trended in a direction, reached into a pattern. After reaching into that pattern, then it shows you a signal that is going to go into another direction, or is going to continue in the direction that it was going into. So that is very important in order for you to manage your risk, because ideally you want to enter a share when there's a higher probability that you achieve your goal. If you are going to buy a share hoping that it will go up 15%, you don't have to shoot in the dark and say, I'm just predicting or guessing that this will go up. If it goes down, it can take you down with and you lose your money. If it goes up, then you would be lucky, then you would make some money. But you don't want to work on the basis of luck, because you don't want to be a gambler when you are trading. You want to only enter into trades that have higher probability of success and higher probability of going in the direction that you have seen the market to be going according to your charts. So look further into trends in the next videos. For now, just open a chart and look and see how a share moves up and down, and to know that this is an uptrend or this is a downtrend. If you are able to call that, then you'll be doing well for you to be able to understand other things that we will do next. Thank you.